Welcome, everyone. Welcome to our session today for Do Not Miss the Deadline of January 31st. And before we even talk about January 31st, let's first understand what is even due January 31st, because it's not really officially tax season when we talk about 1040s or the partnership returns or the S corporation returns. We first have to meet the compliance of filing those informational reports, the 1099s, and then W-2s if that's something that you're helping your clients with. So welcome to today's session. If we do have anybody that's new with us today, want to introduce myself formally. My name is Nadia Rodriguez. I am a CPA based out of Dallas, Texas, and I've been in practice for over.
Okay. You have this one in Spanish?
No, this one.
I got it. Okay, cool.
And then we can just go ahead and mute
Reception's
ourselves
bad.
so that we can.
Your internet connection's unstable.
Yeah.
Okay.
Okay, sorry about that. Just mute yourself so that we can leave questions toward the end. If I do have time, I'm going to continue the conversation with you at the end with Q&A. But if not, we can always continue our conversation out in the chat, in the community chat. But with that, like I was saying, I've been in practice helping clients with their tax compliance and tax advisory for over 15 years. I did jump the corporate world in about 4 months ago. I left the corporate world to pursue full-time my tax practice, and not part-time, now full-time, but also I founded the Nadia CPA Inner Circle, where you're joining us today. It's an online platform for tax professionals where we learn together, we grow together, and we succeed together. But I'm also the founder and lead instructor with Tax Training Academy.
Bye.
That's where we dive more into the courses, tax courses, more intensive programs where we learn really about S corporations, partnerships, and extensive individual tax, really deep diving into those intensive courses. But if you have any questions about the community or about Tax Training Academy, feel free to join us in our weekly sessions where we have office hours. We can help answer any questions and show you more around the platform of what does the Pro Circle membership entail versus the tax training versus our general access. But with that, we are going to get started because we have a lot to cover today. We are talking about January 31 deadlines. I guess after that, officially it marks tax season because we need to start continuing right now to start gathering those documents if we are helping our clients to meet those type of deadlines, whether we are helping our clients with the preparation of those informational reports, the 1099s, the W-2s, or we're partnering with a payroll company. We want to make sure that that payroll company has all of the information correct so that they are filing corrected 1099s and we don't have to later amend those returns. So we're going to cover 1099s NECs, 1099 miscellaneous, the filing mechanisms if you are the one preparing those, or if you're not, like I said, how can we check the math to verify the accuracy of those returns that are filed either by the client themselves or by a payroll company, the W-2. And then we're going to talk about the reconciliation of the 1099K. Because ever since the 1099K came out, there has been mismatches where the PayPal, the Square, those third-party processing companies are issuing 1099Ks, and then we're also having our sales reports and the profit and loss statements. How do we make sure to not double count that income? Because at the end, our clients will be paying additional income that they really weren't supposed to. And we are going to end our session today talking about tips and overtime. As we know, that's a new deduction available to us starting in the year 2025. But the law does say that for you to take a deduction on tips and on overtime, it must be reported on either a Form W-2 or a Form 1099. So if you don't have those reported on those forms, you are not allowed to take the deduction. So we're going to talk about that because it's going to be a little bit of hard work on our part. The forms 2025 tax year for W-2 and 1099s are not changing. So there's not going to be a differentiating factor on how we can compute tips and overtime. So we're going to talk about what's the best practice on how us as tax professionals, how can we help our clients compute those amounts? And so why does this matter? It matters because January 31st is coming up. We need to make sure that we know exactly what to do, how to help our clients, and send them a checklist or just check in with them. Do they need our help to file those 1099s? Are they aware? Have they made arrangements elsewhere? We just need to make sure that we're following our due diligence with our clients and providing that client service to them to see if they need help with stuff like this. Now, January 31st, well, it falls on a Saturday this year. So we do get a little bit of time, because when the due date falls on a federal holiday or a weekend, we get to file on the next business day. So since January 31st falls on a Saturday, the official due date of these 1099s and the Form W-2s to the IRS and to the recipients, to the taxpayers that earned that income on that W-2 or on that 1099, we have to file and furnish those to them by February 2nd of 2026. Hopefully we're not waiting until the very end, because sometimes it is hard to get a hold of those contractors, or can we email them or mail them or hand them to them? But by that date, we are required to file those forms. And we also have the 1099 miscellaneous. We know the miscellaneous years ago is where we used to report everything, not only rents, but also non-employee compensation. And then maybe in the year, I'm trying to think if it was 2020, 21, where we got the new Form 1099 NEC, which is non-employee compensation. That is separating what gets paid to an independent contractor versus what gets paid out to rent for a landlord. So yes, the 1099 miscellaneous has to be given to the recipient. We know that by February 15th. So it's a little bit of a different deadline. Of course, I always internally in my tax firm always just think about January 31st as the deadline for everything when it comes to 1099s, whether it be NECs or miscellaneous, and also W-2s if you're preparing those W-2s. Now, why does it matter for us to meet these deadlines? As you see, I've put that towards the bottom and in red, because what happens if you're late? There is no such thing as an extension to file these forms. Remember to give them to the recipient, but also provide them to the IRS. And if we're late, not only do we get penalized for not sending the copy to the recipient by the due date, but we get an additional penalty for not sending that to the IRS by the due date. So yes, a taxpayer, employer, or the business owner will be subject to 2 penalties for being late on not meeting the deadline of what this year is February 2nd of 2026. The electronic filing mandate. If you have a business owner that files these 1099s or even W-2s, 1099 miscellaneous or NECs, count all of them. Because if that employer, if that business owner is filing 10 or more, at that point, you can't do paper filing for them anymore. It has to be electronically filed. And I will be honest, nowadays, I don't think there's many of us that are doing it paper anymore. I used to do it in paper form years ago by ordering them for free with the carbon copy on the IRS website. And we get them mailed and I would send them in. It was a lot of manual work, but I wasn't doing that many 1099s. Now, even if I just do one 1099, I'm going to just do it online with payroll providers or with those service companies. And I know we had in the community chat a conversation where we're recommending to each other, what are we using? What service provider do we use to file those 1099s? Just so much easier to do it electronic. But if you do run across a client that is still doing it paper and they're a new client to you, just make sure that you're aware of how many of these forms are they issuing every year. Because once they meet that threshold of 10 or more in total, it has to be made electronic. So now let's talk about just the W-2. We're familiar with those. If you're a tax pro that has a taxpayer that is an employee, of course, this is what we ask to see how much their taxable wages are versus the federal tax withholding. But if you are the one that has the employer as a client of yours, and either you're filing the W-2 for them or you're pairing up with a payroll company, again, we're going to step in and we are going to verify the accuracy of those numbers. Now, it reports the taxable compensation. We're aware of that and all of the withholdings, because we know when you are an employer, you are responsible to pay FICA, not only withhold the FICA from your employee, but you as the employer also has to match that amount. And you match that amount and you send it quarterly to the IRS. And those deposits get sent to the IRS and then get reported cumulative on the W-2. Not only is that your responsibility as an employer, but also the federal tax withholding. You have to make sure that you have your employees fill out the W-4. How many dependents do they have? Are they married? Are they single? And then that's how that gets computed, how much federal withholding we have to do on those W-2s. Because we all know this, that all of us who earn income, we all have to pay 3 taxes. We have to pay the IRS, the federal income tax withholding. That's our contribution to the U.S. tax system. We have to pay Social Security tax and Medicare tax. Those 2 taxes do fund our Social Security and our Medicare funds, but please don't rely on those for retirement. We had a great session yesterday with Alicia Vasquez, financial planner, to talk to us about what other options should we have outside of just depending on Social Security and Medicare tax. But the Form W-2, what we do notice is it's always had box 7, which is the allocated reported tips. Now, we're going to pay attention, extra close attention this year to that box. Because if we have taxpayers that are employees in a restaurant or in a service industry where they are getting reported tips on box 7, that's going to be key for us. We are going to want that amount in order to calculate the new tips deduction. Now, who must issue these W-2s? Of course, the employers, where you have to report how much your employees earned in taxable wages and how much that you withhold on federal withholding and FICA. FICA, remember, stands for both Social Security and Medicare tax. Now, we do know here that I put a critical distinction towards the bottom right in red, an alert for you. Independent contractors or self-employed, they will never receive a W-2. Also, partners in a partnership should never receive a W-2. That's a different type of session that we can do all about partnerships. But just know that partners are never going to receive a W-2. Now, have I seen it in practice where they have been issued a W-2 incorrectly? I have. That's not correct. Just know partners do not get a W-2. And so if we go over to just looking at the W-2, right, understanding the form, because we're going to get very familiar with this form now that tax season is coming through. We know box 1, that's going to be your whole taxable wages, your whole gross wages. Of course, it's not going to include any amounts that are not taxable. So I always explain to my clients, box 1, it might have $40,000, but maybe your employment contract had that you were supposed to receive an annual salary of $50,000. Why is there a difference? One, because we are maybe contributing to a retirement account through our employer through our 401k. That amount will not be included in box 1. That is not taxable wages. Instead, it's a deferred wage later. We will get taxed on it at retirement when we take that money out. But tip income, if we do have a restaurant worker and they do get paid a wage and they get paid also tips, the wage and the tips, both of them will be on box 1 because it's subject to federal income tax. The same thing goes with box 3 and 5. Box 3 and 5, that is all of our 100% of taxable, of gross wages. That's subject to the other 2 taxes that I was talking about, Social Security and Medicare tax. Now, box 3 and 5, that will always include 100% of your gross wages, even if you decided to contribute part of them to a 401k. And it's not taxable on box 1. It's not going to be subject to federal income tax, but it will always today be subject to Social Security and also Medicare tax. Now, if we look at line 2, of course, always verify that line 2, the federal income tax withhold for that employee. If you are helping the employer with the filing of Form W-2, we want to make sure that all of the box 2 from every single employee, if we add them up, it's going to add up to what we are reporting on the Forms 941. Because the 941s are sent quarterly to the IRS, letting them know how much of taxes have we deposited throughout the year. And so if we look at line, here, did I just skip one? Okay, box 7. This is the one that I was telling you we have to start paying a lot of close attention to now that it comes to the new tax bill for the no tax on tips. Line 7 is going to have your Social Security tips. This is going to be helpful because, again, this form is not changing. Now, are we going to be assured that line 7 or box 7 is qualified tips? Because as we're going to learn towards the end of the session, a tip, in order for it to be deducted as a deduction, it has to be considered qualified, which means it needs to meet certain rules. It needs to be a voluntary payment by the customer. It needs to be something that's not negotiable or forced. So if you think about the restaurant industry, sometimes they will charge you a mandatory tip or mandatory gratuity if you have a large party with you. That is not a qualified tip. That does not meet the standards for the law that talks about the deduction. However, since we have no distinction here, and if we don't see anything that the employer is telling us that there's a difference between line 7, box 7 of Social Security tips, and out of that amount, how much is qualified versus non-qualified, the IRS has issued guidance that for 2025, basically what they said is do the best that you can to compute the amount of qualified tips. And they did say and mention that box 7, we are going to take that amount as 100% qualified tips. So we are going to need that amount for the new form, Schedule 1A, to report the no tax on tips deduction. Now, box 8, allocated tips. If you do have an amount on that, what is box 8? Box 8 is for those restaurant workers. Not all restaurants are required to report something on line 8. It's usually those larger restaurants, those chain restaurants. And what that means is that if the employee, the server, the waiter, the waitress did not report enough tips of what they should have expected based on the size of that restaurant, then the employer, the restaurant owner, has to come into line 8, box 8, and drop in the extra tips that did not meet the standard 8%. That's a standard 8% of sales. It's a computation that goes on the side. Just know that box 8, the allocated tips, also count towards the no tax on tips. Sorry, just I think I hear some background noise. We'll just go ahead and mute. Okay, sorry about that. So allocated tips, we are going to need that because not only have we always needed this amount for Form 4137. This is where the employee, the waiter, the waitress will report and pay the Social Security and Medicare tax on these tips that were never reported. But now we're going to need that amount because now that they are claiming it as extra tips, we're going to have to pay Social Security and Medicare tax with our 1040, but also we're going to receive that no tax on tips deduction. So line 7 and line 8, box 7 and box 8, that's what's going to come in handy for us for a new no tax on tips deduction. Box 14 is other. Box 14 on the W-2, it's a free-for-all, just anything, it's informational. But here's where we're also going to pay close attention because maybe there are some employers that will be reporting the amount of overtime, the amount of tips. Maybe they were qualified versus non-qualified. Maybe we get lucky enough that this information is provided to us here in box 14 and we don't have to compute it on our own, especially for overtime, because the total amount that the taxpayer is earning for overtime will all be lumped into box 1 with no distinction unless the employer was nice enough to separate it somewhere on a footnote in box 14. So really pay attention to box 14. And I'm curious to know, whenever we start receiving W-2s from our employee taxpayers, is there anything in box 14 that these employers are helping us out with? Box 12, this is really where we have all of those, again, additional information, right? The most common is code D for the 401k distributions. Most likely that's what's going to reconcile the difference between box 1, taxable wages, and box 3 and 5, which is wages subject to Social Security and Medicare tax. But I did want to call out box 3 here, Social Security wages. Like I said, we all have to pay Social Security tax. There is a limit every year of how much do we have to pay? What's the maximum wages that are subject to Social Security tax? For the year 2025, I believe it's like 176,000 for box 3. Box 5, Medicare tax, there's no limit. We pay, if we generated $1 million of wages, we're going to pay Medicare tax on $1 million of wages. Social Security, if we generated $1 million of wages, we're only going to pay Social Security tax up to the limit of every year, which is 176,000 for the year 2025. Now, another form that comes into play when it comes to the deadline and the reporting of these wages is the form W-3. The W-3, really what it is, it's just the accumulation of all of your W-2s. It's almost like the cover page. You put the cover page of the W-3 and then all the W-2s behind it, because the W-3 is going to let the IRS know how many W-2s are you filing. What's the total wages for every single W-2? If you add them all up, what's the withholding for all of those? So really, it's just a W-3 cover page for all the W-2s. And of course, this is something that if we are pairing up with a payroll company for our clients, we are going to verify the accuracy of the W-3, that the number of W-2s reported on the W-3 matches to how many W-2s were issued, that it matches to the sum of all of those gross wages that we see on box 1 and all of the withholding. Because if not, there will be a notice that would be issued by the Social Security Administration, because they are checking also the math. So it's better for us to give it a check before it gets filed. Now, the 1099 NEC. Non-employee compensation. Who gets to issue this? Of course, those business owners that are paying those independent contractors. Remember, not employees, those independent contractors, in amounts of $600 or more for the entire year. So yes, you're not going to take it where if we only paid a contractor $10 here, $20 here, $30, add them all up. Once it hits $600, that independent contractor has to receive a 1099 from us, and we also have to file one to the IRS, remember, by February 2nd of 2026. Now, there is exceptions, like who doesn't receive a 1099? Of course, the corporation. So if we are hiring a vendor that is incorporated, and how do we know if they are? It's by us asking them to fill out the W-9. Let us know, check the box if you are a corporation or if you're a sole proprietor. What type of entity are you? Because corporations, some S corporations do not have to get issued a 1099. So what I like to do is when I get my clients' list of vendors of who they paid, and if I see the W-9s have corporations, I'm like, good thing I don't have to issue a 1099 to these. Remember, those don't require it unless you have paid an attorney. Even if that attorney is a corporation, it's you still have to issue them a 1099 for their legal services that they did provide. Now, what do you report? Of course, the services they provided. If somebody is selling you merchandise, inventory, you don't report that on a 1099. Think about services that someone is providing to you. Any type of rent, and your landlord. If you are paying rent to a landlord, you have to issue them a 1099 miscellaneous. If you are a landlord yourself, expect to receive a 1099 miscellaneous where it shows the amount of rent you received. And then here we have just a common error. Don't include any type of expense reimbursements, especially if you do have an S corporation shareholder. And that shareholder, we're transferring money over to that owner shareholder in exchange for the home office, for exchange for using their personal vehicle for the business. They have business mileage reimbursements. We don't issue a 1099 for that. It's just a transfer of cash, a journal entry, no type of reporting. And I do want to make a note here, which I've seen sometimes incorrectly done, is that some shareholders, when we are towards the end of the year or even the following year around this time, and if that shareholder did not ever receive a reasonable compensation through a W-2, I've seen practitioners just issue a 1099 for the compensation. That is not correct. A shareholder must receive a W-2 for their reasonable compensation. So the solution is to file that payroll tax and file the W-2 for that shareholder. Don't issue a 1099 to a shareholder. So the W-9 collection, this is what we're saying. We need to ask for the vendors, those service providers. In a perfect world, we are asking these providers, these service providers, the vendors, the independent contractors, for them to give us a W-9 completed and signed before we issue the first payment. But as we know as tax professionals that sometimes we get new clients or clients come to us during this time, once the year has closed and once the payments have been sent out and they never learned or they never heard about sending a W-9, asking for social security numbers, tax ID numbers, information from those vendors. And so during this time, we are spending time calling up those vendors, or either the client is calling up vendors. And as what we've known, most of the time, those vendors are no longer picking up the phone or providing information. Why? Because they've received the payment and the last thing they want to do is receive a 1099 for these services that they issued. Because now the IRS is going to know that they have received payment for services. Is that correct? That's not legally right, but it's happened. Unfortunately, it happens way more often than we want to. So yes, this is where we want to implement a new practice with our clients. Starting this year, if your client has never issued a W-9, have them have a policy, which I have here, where their policy with the contracted vendor is you have to file this 1099 to us before we issue any payment. And on step number 3, you can see here, what about if the payee, that service provider, that independent contractor is refusing to give us a W-9 completed? At that point, then we are required by law to withhold 24% of the payment to them. This is why it's important for us to receive that W-9 before we issue the payment to the vendor, because we have to withhold 24% and send that in to the IRS. It's considered backup withholding required by law. Now, the preparation of the 1099, this is just a high overview. What do we see on box 1 is the non-employee compensation. Box 2, I've never seen this in use, but it's not saying it's not impossible. Of course, it has been used in other type of industries, is if they made direct sales of $5,000 more of inventory of consumer product. Box 4, again, federal income tax withholding for a 1099 NEC. Very rare to see, only if you were required to withhold the 24% because your vendor, your independent contractor refused to provide you a W-9 completed. The most common errors that we see on the 1099, of course, if we're filing it for the incorrect year, just know that by February 2nd of 2026, we are filing the year 2025 at 1099 NECs, the payments that we made to contractors by that. Any flip data, of course, we're humans, we can make errors. If we're preparing these 1099s for our clients, always double check your math. The name and the taxpayer ID mismatch. Now, there is a feature on the IRS website where you do have to enroll if you want to do the taxpayer ID match to make sure that the TIN, the taxpayer ID they're giving you, matches the name. There is a service that they provide. Also, payroll services or those partner companies that we hire or software companies that we hire to help us prepare the 1099s, they also have the service with them where they can match that TIN. Now, what about if there's a mismatch? You might get a notice from the IRS saying there's a problem with your independent contractor. Basically, if you're going to continue to pay them, withhold the 24% or have them correct their ID number with you. The filing requirements, like I said, there's you can either go through the IRS portal. Again, you have to apply for this in advance. And it's just, I think it's too close for us to try to apply and get verification that we can be a provider and file the forms through there. Always try if that's a method you want to go. My preferred method is to pay the software company. I go in, create a username, password, and per 1099, it does charge me a fee. I'm manually entering them, but it saves my information for next year if it's going to be a continued taxpayer client of mine. authorized transmitters is what it's saying. There's some here that are listed, Track 99, Tax 1099. The one I use is called a Smart Payroll. And then I'll also in the community chat, other tax practitioners have given us ideas of which software providers they use. So if you're looking for one, please check out that conversation that we have in the chat. Now the 1099 miscellaneous, separate from the 1099 NEC. Box 1 is the mostly used for the 1099 miscellaneous, is that when you pay rent to a landlord, you have to file the 1099 NEC or miscellaneous on box 1, the rent. Box 2, royalty is not very common unless you're in the oil industry. And there's royalties, or either you have an employer that is a publishing company and they're paying royalties on the book to the author or to the music producer. That's box 2. Box 3 is just any other income. It's going to fall under miscellaneous, 1099 miscellaneous, any kind of prizes, awards, any kind of taxable damages. What that means is if you win a settlement in court, maybe you're suing someone and you win a settlement, the income is not going to be tax-free. It's going to have to be on box 3. Of course, there are instances in legal battles where settlements are not taxable, and they have to do with, injury and other kind of avenues. But if you do have a client that worked with an attorney or they receive a 1099 miscellaneous box 3, ask them more about it. What was the lawsuit about? Because again, it might have been issued in mistake. Maybe the settlement was in fact a compensation for medical expenses or compensation for injury. That wouldn't be taxable. So always ask the question, what was this about? Instead of just entering into the software, let's find out more. Now, if we look at the 1099 NEC, we're just a quick overview. We have on box 1, the mostly used. We saw this already. Box 4 was the federal income tax withholding. And don't forget box 5, 6, and 7. If you do have clients in a state that have state income tax. I know California has that. New York has that. Here in Texas, we don't have state income tax. So my clients that are here based in Texas and have their vendors and their independent contractors in Texas, we never use these boxes for state reporting. But of course, always make sure that you are reporting that if needed for your own state. So the miscellaneous, of course, the deadlines we know. This year we get a little bit more of an extension because it falls on a weekend. It's going to be February 2nd of 2026. And this scenario, we're going to talk about office rent because I think this is one of the most confusing, that you do pay rent. You don't think about it. They didn't really provide you a service, so we don't think we have to issue anything because we're just paying rent. Let's talk about an example where the client pays $2,000 per month to a landlord for office space. So in total, it was $24,000 to this landlord, and they are an individual. And so the correct treatment is to issue that form 1099 miscellaneous, not the NEC, but do report something on a 1099 miscellaneous. Watch out for the missing W-9. Of course, it's going to be required because how else are we going to report the 1099 miscellaneous? We're going to need a taxpayer, that recipient's, the landlord's first name, last name, their identifying information, their address, their contact information. The attorney payments, the same thing. We do have to, those service fees that we pay the attorneys have to be reported on 1099 NEC. And that also applies even if the attorney is incorporated, if they have a corporation themselves. Okay, we can go over to the 941. So the 941, we're talking about employers' quarterly federal tax return. If you do help your clients with this, or you pair up with the payroll company, just know that when employers are withholding FICA taxes and federal income tax withholding, they have to get deposited to the IRS either monthly or even quarterly. It all depends how much their liability is. The most common, it's going to be a monthly deposit or even bi-weekly deposit. But every quarter, you have to file the Form 941 to let the IRS know and remind them how much you deposited in for federal withholding and FICA taxes. The 940, this one gets filed at the end, and it's only once a year. The 940 is the unemployment tax that we have to pay for having employees. The 941 is different, right? We're just reporting how much we're withholding on the employee plus how much the employer has to pay for FICA tax and in any type of federal withholding from the employee. The 940 is employer responsibility. They have to pay a tax up to $7,000 of wages for each employee. It's going to be a tax of unemployment tax. Gets filed only once a year. And that one is due at the end of January 31st, but it falls on a Saturday. It's going to be due February 2nd. So the 1099K, 1099Ks, I think this is where a lot of confusion comes through because the 1099Ks have to be reported. The responsibility falls on the Square payments, on the Venmo, on the Cash App, the PayPals. They're called third-party processing agencies. And so they're the ones who report these to those recipients. So if you have clients that are collecting their payments through Stripe, through Square, or through PayPal, they're going to be receiving a 1099K, but we do have limits. It's going to be if they have made sales of 20,000 or more, or they have more than 200, and they have more than 200 transactions that they issued or that they had with a third-party processor. So we do have a 1099K that reports the total received or the total paid out to that one business owner. But we have to make sure that we pay attention to the reconciliation, because as we see here, here it is, the reconciliation steps. We're going to start off with the gross received on the box 1 of the 1099K, and we're going to have to report that as total sales. Now make sure that you're reconciling that with the profit and loss statement, because what you see on the profit and loss statement, it might not all of those gross receipts might match the 1099K. It doesn't have to, because remember, the 1099Ks are only required to be issued when it meets a certain threshold. And so we need to make sure what gets included on the 1099K, and is that income, those sales, are they reported on the profit and loss statement? And then, as you know, the 1099K, the gross paid out to our taxpayer business owner, includes everything. It might not match what got deposited, because what got deposited to the bank account of our business owner is going to be the total sales minus any kind of credit card processing fees. But the 1099K is going to show 100% of sales. So we have to make sure that we're looking at how much credit card fees or how many processing fees the client has, or maybe there's a report. I've seen a report that is attached to the 1099K that does give us more insight into the processing fees. So that's what step number 2 is. Make sure that you subtract those items, or that we're making sure that we're not double counting, or we're having our taxpayer count extra income when they didn't receive that extra income. So if we go over, I'm going to skip over, you'll get a screen, you'll get a PDF deck of all of these slides anyway to come back to. There's just examples. But if we're talking about the penalties, let me talk about the penalties with you, because I talked a little bit about it, how we get penalized. We, the one that should have issued the 1099 in a timely manner, we will get penalized if we don't meet the deadline. And we're going to get penalized twice. One, for not giving it to the recipient, that independent contractor, the 1099, or even the employee for issuing W-2s, but also get penalized for being late with the state agents, with the IRS, or with the SSA, what eventually goes to the Social Security Administration. We need to make sure that we have an incorrect penalty for a taxpayer ID number. Now, what this happens, it just means, I've seen it in practice where we have an ID number that was provided to us on the W-9. When we file the 1099, it gets filed, and then later the client does get a letter from the IRS saying there is a mismatch, that taxpayer ID number does not match the taxpayer reported on the name, the first and last name. At that point, it's a warning. And I tell my clients, we can no longer, either this client has to, this taxpayer that was the independent contractor, the vendor, they have to correct this W-9, but this number can no longer be used until something happens. Either they correct it or we have to withhold 24% because we've been warned by the IRS once. And it does say on the letter that we will be subject to penalties if we are ignoring this type of caution and we keep on issuing 1099s based on that incorrect taxpayer ID number. But with that, let me skip over to, like I said, this is just talking about the tools and technology that you, of course, let's take advantage of technology. Don't do what I did 10 years ago and order those carbon copies, right? Let's go ahead and make sure that we're using technology to its fullest. Client communication. If you haven't already, start contacting your clients if they need help with filing, if they want to hire us to do the 1099 NECs. Do they need to do the W-2s? Did they hire the kids and just never partnered with ADP or a payroll company? Then maybe at that point we come into play and we help them with the filing of the Form 941, which is the filing of those payroll deposits, filing the W-2 for the kids, the W-3 for all the kids, all the W-2s that we issued. So this is something that, yes, if they were paying their kids but just were not aware about filing payroll requirements, this is where we can make sure that we partner with them, provide an engagement letter, price our services, and then also price our 1099 NECs. What I have seen in the industry is a charge per 1099 NECs, where I've seen some tax practitioners charge from $25 up to even $75 per 1099 to be prepared for that client. But you do have bonus materials that we will provide to you, which is an email template for Pro members on how to send out that communication now. Just kind of start that conversation with your clients. Have they paid someone $600 or more? Who are they paying their rent to? Is that person an individual that they have to issue now a 1099 miscellaneous? We have a reference guide also available to you for a bonus material after our session, which is just a comparison of the W-2, the difference between a W-2, the 1099 miscellaneous, NEC, and the miscellaneous, and also the here the 941, the 940, all these payroll reports, and the 1099 NEC and the miscellaneous. So do refer to those bonus materials after the session that we will provide to you. But with that, let's really get into tips and overtime, because this is something new for us starting the year 2025 and it goes all the way up to 2028. And it's going to be important for us now that these compliance, the payroll compliance comes through and the 1099 NECs. Either we're helping our clients prepare these and what should we include on them, or either we're receiving them from our clients. So what can we look forward to? With that, let's get started with just an overview, right? A quick recap, because we have a whole session in the Circle community that we do have available for Pro members that talks about the tax law updates and really goes into more talking about these different deductions that come with the One Big Beautiful Bill. But here's a quick overview. So we have 2 new deductions. 2 out of the 4 new deductions. The ones that I am going to go over is the tip deduction and the overtime deduction. We know that for qualified tips, if you are a taxpayer receiving qualified tips, remember, a qualified tip is one that is not negotiable, one that is not forced on the one paying you the tip, but you're the taxpayer receiving these tips, you can take a deduction up to $25,000 of those tips. So if you receive at the end of the year $30,000 of tips, your limitation is going to be $25,000 of a deduction. Now for qualified overtime, maybe you're putting in extra hours, more than your 40 hours. Then at that point, the qualified overtime compensation that you're receiving, you get to receive a deduction up to $12,500 of that. Or if you're married filing joint, on your return, you can have a qualified overtime deduction up to $25,000. Now, there are limitations. The limitations are based on income. Once the taxpayer has more than $150,000 or $300,000, if they're married filing joint, of income, these deductions start to get reduced. It gets reduced for $1,000 for any amount over the the 150,000 or 300,000. Now, the strict filing requirements, you do have to have a social security number, not just a social security number, but it also has to be one that is authorized to work. So when we are preparing our clients' returns during this time, if we do have a social security number or a social security card that does say authorized for work, our second step is going to be asking for a copy of their work permit, because their work permit has to be valid and not expired by the time we file the tax return. Even though it was valid in 2025 when they earned the tips or they earned the overtime, it has to be valid by the time the return gets electronically filed or even paper filed. So make sure that we're requesting a copy of the work permit. The documentation is mandatory. So the law does say that in order for you to receive these type of deductions, the total tips, the total overtime has to have been reported on a Form 1099, either Miscellaneous NEC-K or a W-2. Now, we are going to run into problems, because what does this mean? Those clients that are receiving their income through Zelle or through a bank transfer, Zelle is not a third-party organization, so they are not going to issue a 1099-K, even though that taxpayer meets the threshold of that 1099-K, they will never issue a 1099-K. So the tips that have been received through physical cash or through a Zelle or a bank transfer will not qualify for the tip deduction. Now, how are we going to know the difference? This is where our client's going to have to come to us, and we're going to have to request for them to bring us a record or a distinction of their total sales or their total service income. Out of that, how much was reported through Zelle, or how much of the tips were received through Zelle, how much was received through a PayPal, through a Stripe, through Square. And then we're going to hope that the Square and the Stripe are going to issue the 1099-K. This is going to be a big of a headache, and it's going to be unfortunate news to our clients, because if they did not meet the thresholds to receive a 1099-K from the service provider, from the third-party processor, the Venmo, the Square, the Stripe, then we cannot take a deduction on those tips. And there is a frequently asked question on the IRS website that specifically addresses this. And then they have clarified they must be reported. The tips must have been included as part of either box 1 of your W-2 or on a 1099-K or a 1099 miscellaneous as box 1. So that's going to be one of those that we are going to have to work with our clients in figuring out, have they received a 1099-K? Should they wait for a 1099-K? Do we need to extend? Those 1099-Ks should be in the mail. I'm assuming now for a lot of these bigger companies are getting ready to issue those, but hopefully we're having the clients check with their vendors or with their third-party processors, third-party settlement processors, to make sure that they're getting the 1099-K. But if they were not issued one, is there a way we can mandate them? We can't to get one issued. So that's going to be unfortunate news for those clients. So this is what I'm talking about, the information reporting. It's by law. By law, it says that it has to be reported on one of these forms, on a W-2 or one of the 1099 forms. When we're looking at navigating the W-2 for the employees, and we're talking about tips and we're talking about overtime, we know that on the W-2 for tips, we already have box 7. Thank goodness it's reported there. Or box 8. Remember, box 7 or 8 are the ones we're going to depend on when it comes to the tip deduction for those taxpayers. Now, how about overtime? Box 1, the taxable wages, the W-2 will include total wages, which includes regular salary, regular hourly compensation, plus overtime. So at that point, we are going to have to ask our clients if they have worked overtime. And if they have, did they get paid time and a half, or did they get paid double overtime? And then also we're going to have to ask for a paycheck stub, the last paycheck stub. What about if they had multiple jobs during the year where they got paid overtime? Then hopefully they saved all of those paycheck stubs, or they can contact their employer for the copy of the last paycheck stub received from that employer for the year 2025, because that's what we're going to depend on if the employer is not reporting anything on box 14 for us. And we do have clients that do, they deserve this deduction. It's a legal deduction, but we need to know the math behind it. Here where we talk about the question, and we do have a session next week that's open for our pro members where we're going to talk about this, and we're going to have an organizer or questionnaire that we can provide to our clients when we talk about tips and overtime, because they need to start identifying these numbers or bringing with them to our appointment or provide to us the paycheck stubs, or start asking their employers for a copy if they didn't keep a copy of their payment of their pay stub, the last pay stub. Because here's a question that I'm asking is, did you work overtime? Client, did you work overtime? If so, tell me more. Is it paid time and a half or overtime? Because the law says that if you get paid time and a half, only the half portion applies to the deduction. If you get paid double time, then what we're going to do is we're going to do the math. We're going to take that overtime pay on the payroll stub, the year to date total collected. We're going to divide that by 4 if it was double pay, or if it was time and a half, we divide it by 3. And we're going to really dive into that next session for the pro members to talk more about this, because it's going to be, I'm not going to lie, it's going to be a little brutal for us when it comes to taxpayers and how we're going to be able to help calculate this amount. Because like I said here at the last point, this year, when we're doing tax season, we are becoming a detective. We are going to have to be asking these questions and computing these amounts, these deductible amounts, because the IRS is trusting us, or the taxpayer, well, us if they're hiring us, to estimate, to do our best estimate, but we have to document. How do we come up with that amount of overtime, of qualified overtime? We need to have documentation for that. So just leaving you with, what is something after this session? What is something that we're going to go and try to send out questionnaires or send out emails to our clients who they need help with the filing of the 1099s or the W-2s? They're due in 2 weeks. Do they need help with overtime? And what about tip deduction? Is there anything that they can start doing now? Preparing themselves on computing those amounts, distinguishing between service income and tip income. They need to go back and they need to go back to 2025 and start looking at their books and records. This is why it's so important that when you are a business owner, we need to have our accounting, our books in place to account for things like this. So, just going forward, remember the e-file mandate. If you do have clients that are paper filing anything, make sure that they're still meeting the standard that if it's over 10 reports in total, W-2s, 1099s in total 10, they're required to do e-file. Our hard deadline is January 31st, but thankfully it falls on a Saturday, buys us a little bit more days for February 2nd. Don't miss the deadline, but start right now with the conversation of collecting all of those numbers. Remember, have your clients start implementing a policy for independent contractors that if they're refusing to sign the W-9 and provide that information, withhold the mandatory 24%, which is what I've seen gets a lot of clients in trouble for not withholding.